Beyond the Broom with the NSA, sharing information, innovations, and market trends shaping the commercial cleaning industry. We sweep away the noise to bring you the insights that matter.
All right, we're going. We're live. Welcome to the NSA Beyond the Broom podcast. I'm your host, Ryan LeMire, along with my co-host, Debbie Wakefield. Today, we're going to dive into another NSA market commentary that we update monthly and send out monthly. Just kind of touching on some higher economic indicators that everyone should be familiar with, kind of where we're trending, where we're at in a macro environment, and take a look at some of the pricing and some of the trends we're seeing in the industry. Again, we're not economists. We're just here to provide some information, some detailed analysis of what we're seeing at the NSA in relation to the commercial cleaning industry and, the overall economy in general. So, Debbie, how are we doing today?
Doing great, Ryan, and we're looking forward to talking about all of these numbers. These all make my head spin, so I'm glad you're here to break it all down for us.
They make everyone's head spin.
So let's jump into it. How about you talk a little bit about the current macro environment?
Yeah, so in June, we added 147,000 jobs, lowering the unemployment rate to 4.1%. Labor participation was a little light, declined to 62.3%. Traditionally, it's between 62, 64%, somewhere in that range. So not much of a decrease, but some of the folks that were looking for jobs did drop out of the market. Consumer confidence, which is a big one, dropped to 93.4, which was significant compared to previous month. Real average hourly earnings rose 1%. So that continues to be a sticky metric when it comes down to overall business expenses, right? Wages are going up. It's going to cost more for business. It's going to cost more for bids and in the overall environment. Big week this week. The Federal Reserve's meeting today and tomorrow. Expectations are to leave interest rates unchanged. Probability of a decrease, which everyone's hoping for, doesn't seem like it's going to happen. It seems like they're going to stay in line with the 4.25 to 4.5%, meaning no changes yet this year in 2025.
Well, I mean, that kind of sounds like everything's settling down a little bit, which is what we're seeing on the pricing side of things, with a few exceptions here or there. So price stabilization is good. How about the current inflation metrics? How does that affect everything?
Yeah, so CPI, which was a consumer price index, was up 2.7% year over year, indicating low inflation with occasional spikes. And the producer price index, was slightly up as well in June. Some of the key factors behind that's driving it lower, where it's not necessarily continue to increase like we saw a year or two ago. Like you said, we're seeing prices stabilize. Energy prices have gone down tremendously. Supply shocks to the system have really flattened out. They've been resolved. So that's leading to more return normal prices for goods and services. Food prices continue to remain high, especially for dining out. But if you look over the last couple of years, they've really stabilized. The main driving factor with inflation right now is the rent and housing costs. That contributed to like a 4% increase in the month of June. So that adds to the overall inflation number. But again, within our industry, we're more concerned about the goods and services that we provide. So it doesn't have that much of an impact with us, but still is a key contributor to inflation.
Yeah, well, I'm feeling it. Every time I place that DoorDash order and they're coming to me, that price gets higher and higher every time. So I'm definitely feeling it on my end. How about in the paper category? Like I know the increase in PPI and pulp. We have that. How is that going to affect the paper manufacturing industry?
Yeah, so we're seeing it prices kind of drop, not significantly. It's like we said, the key around this is going to be stabilization. It seems like it really is flattened out. We're seeing that with our partners, right? So we don't have any increases coming in the paper category for the remainder of the year at this point in time.
Barring any unforeseen thing that might happen.
Yeah, we
Just
don't
put
know
that
what
out there.
that's the global trade restrictions, so basically tariffs. No one really knows what that's going to look like. Could impact the second half of the year, but from where all indications right now, economists were expecting inflation to tick up substantially over the last month or two, and we're just not seeing that. So that's indicating that tariffs are not too impactful the way the majority of folks thought they would be. So that's a good thing. So we just got to keep an eye on how that plays out, and we'll get a better idea, I think, over the next month or two as we get additional data and key driving points that come into the market. And that's going to be obviously one of the more looked at metrics when it comes to overall inflation that Jerome Powell, the Fed chair, is going to be looking at along with the rest of the Federal Reserve Board. So things are looking good there on that front. If you look at chemical manufacturing prices, they edged up slightly. Most notably, soaps and detergents saw a major price jump. Plastics and resins price remained relatively flat, and that just goes back to, a lot of the input costs come from oil, right? So whatever the price of oil is doing, because that's a major manufacturing component in the overall world, especially at most economies. So as long as that remains low, prices should the whole price increase should quiet down quite a bit heading to the back half of the year. Again, that's as of today. Things could change, but right now everything's looking pretty stable.
So you think we have nothing to worry about? Everything is good, at least in our industry. And we did talk a little bit about that too. Our contracts are pretty stable right now. Everybody, for the most part, has pricing that's extended out through the end of the year. As long as, a tariff or something doesn't come about to change that, we should be in a pretty good place for the remainder of the year, I think.
Yeah, I think August 1st is going to be a good date to look at. So that's coming up Friday. We'll be able to, see what kind of trade deals are in place, kind of more details around the trade deals that have already been in place. So I think August 1st is going to be a good indicator, a good date to keep an eye on, be a good predictor of the future price increases / decreases.
Well, again, I don't know a lot about the numbers. I listen and try to take in what I can, but I will say that I have a better feeling about things now than certainly we did earlier this year when it seemed so volatile and everybody was nervous about, everything, and changes were coming at us left and right, it felt like. So definitely feels better in this position now to have that stabilization in place.
Yeah, again, this week's it's a big week in the overall world of business, especially within the stock market, with a lot of larger companies reporting earnings out. So the earnings is that's just going to be the key driver to give us a good indicator of the overall health of the economy, right? If they're making money and they're exceeding expectations, that should indicate that businesses feel comfortable right now. They're going to hopefully start making more investments within their business, whether it's in technology, whether it's large CapEx expenditures, purchasing large pieces of equipment. So I think this week's going to be key. And again, Federal Reserve will meet and they'll come up with their minutes on Wednesday. So that'll give us kind of a line of their thinking as we head into the final back half of the year.
All sounds good. Sounds like good position or a good place to be in for us right now. So
yeah, and again, another thing you want to, and I only mentioned in the last market commentary, but keep an eye on the bond market, the 10-year Treasury yield. If that fluctuates, right now it's between 4.5%. That's a good indicator of where economists feel interest rates are going to be over the next, 2 to 10 years. So as long as we don't see a spike in that, I think people are going to be confident to go out, make their investments, make their business investments, spend the money, and really feel confident that the economy is improving. So just keep an eye on that.
Well, that sounds like great information. Anything else we need to share with our folks?
If we look at if we're looking at moving forward, just looking at some of the business surveys, recent economic activity has picked up. The outlook still remains neutral to slightly pessimistic, but again, that's due to the rise in import tariffs and the costs associated with that. But cost pressures, they should start to relax. Many businesses were preemptively raising prices and delaying hiring and layoffs amid uncertainties. So I think as we see what the Fed comes up with this week, what their thought process is, there's going to be some key indicators to keep an eye on. Outside of the Treasury yield, you're going to want to look for margin compressions. Another one where you can get deep into the woods on is financial stress from delinquency rates, and then rising housing inventories. Those seem to be lead indicators. So it's just going to be data dependent as we move forward throughout the back half. But right now, everyone seems to be confident that the economy is on a good pace. We're going to have good growth this year, barring any sort of crazy tariff type situations. But 2026 should be interesting. Should start to see more cuts from the Fed as we move into 2026. The rate of those cuts is yet to be determined, but the expectations that interest rates are going to start coming down, especially if we get some data points that would indicate the overall economy is coming to a slowdown, because the whole key is to keep growth going, make sure we're in a good spot. Unemployment will ultimately dictate where we're at on that front.
Well, again, all sounds like good news, and I don't want to scare anybody out there or anything, but there are, at least as of the recording of this podcast, 148 days until Christmas. And then before you know it, it'll be 2026, and then we can be talking about what the economy looks like then.
It's never ending. It's always changing. The first 7 months have gone ridiculously fast. And it just seems time keeps going faster and faster and faster. I feel like we're just at Christmas, but now's the time. We're coming to the end of the summer months. Folks are going to start looking at the numbers for this year, projecting out what the final numbers, expectations are. And ultimately, they're going to start forecasting for 2026, over the next 3-4 months. So stay tuned. It should be, it's going to keep rolling. The world keeps changing and moving. So it should be interesting, the back half here.
Well, I appreciate you, diving through all of this and explaining it for everyone. And hopefully there's some good takeaways in there for everybody, and a little calmness, maybe a little hope for everybody out there in where the economy's going.
Yep. And we'll continue to keep updating everyone each month as we get the numbers, try to dissect them as best we can, give you some insight as to what we're seeing, and you can utilize that to manage your expectations and your business properly.
Sounds good. Well, we appreciate everybody for joining us today.
Take care, everybody. Bye.
Thank you. Bye.
Beyond the broom.